On March 19, 2023, a bank once synonymous with Swiss discretion and stability was swallowed whole, acquired by its rival UBS for a mere 3 billion Swiss francs. This wasn't just a merger, it was an emergency rescue orchestrated by the Swiss government to prevent a global financial catastrophe. Imagine Zurich, in the late 19th century, a city humming with industrial ambition. Cobblestone streets echo with the clip-clop of horses, grand neoclassical buildings rise, and inside their hallowed halls, the foundations of a new financial power are being laid. In 1856, Alfred Escher, a visionary politician and industrialist, founded Schweizerische Kreditanstalt to finance Switzerland's burgeoning railway system. This institution, which would become Credit Suisse, quickly evolved beyond its initial purpose. It became a bedrock of the Swiss economy, funding infrastructure, supporting industry, and meticulously managing the wealth of the world's elite. For decades, the name Credit Suisse was shorthand for reliability, prudence, and sacred confidentiality. Its private banking arm attracted vast sums from around the globe, promising stability even in turbulent times. It expanded aggressively, establishing a formidable global presence in London, New York, and across Asia. By the late 20th century, Credit Suisse stood shoulder to shoulder with the world's banking titans. Its balance sheet was immense, its reputation pristine, its future seemingly unshakable. It was a symbol of Swiss efficiency and unwavering trustworthiness, a financial fortress built to last for centuries. This perceived invincibility, however, would slowly begin to fray as ambition began to outpace caution. But beneath the polished facade of Swiss precision, a new culture was quietly taking root, one that would prioritize aggressive growth and risk over the very discretion that built its empire. Now fast forward to a sleek trading floor in Canary Wharf, London, circa the early 2000s. Monitors flicker with dizzying data, phones ring incessantly, and the air crackles with the high-octane energy of derivatives traders chasing ever larger bonuses. The new millennium brought a shift in banking. Quiet wealth stewardship was overshadowed by lucrative, riskier investment banking. Credit Suisse, eager to compete with Wall Street, plunged headfirst. First cracks, Enron's scrutiny in early 2000s. The 2008 crisis tested it, reinforcing a false sense of security. The true erosion began in 2014. The US Justice Department slapped Credit Suisse with a staggering $2.6 billion fine for helping wealthy Americans evade taxes. This wasn't just a penalty, it was a profound blow to sacred Swiss banking secrecy. It signaled the world, even Credit Suisse played fast and loose. But the bank seemed unable to learn. In 2016, a scandal emerged around billions in hidden debts to Mozambique, the tuna bonds affair. Credit Suisse was deeply implicated in arranging loans for a project that was a front for massive corruption, plunging a poor nation into ruin. The bank paid a $475 million penalty in 2021, but reputational damage was immense. Just as it tried to regain footing, an astonishing corporate espionage scandal erupted in 2019. Credit Suisse was caught spying on its own former top executive, Iqbal Khan, who defected to UBS. This Spygate affair, a bizarre episode, led to high-level resignations and made the bank a global laughingstock, a symbol of corporate dysfunction. Then came the double blow of 2021. First, Archegos Capital Management, a US hedge fund, imploded. Credit Suisse, a prime broker, reported a colossal $5.5 billion loss in a single quarter. The bank had extended billions in leverage to a single client with concentrated bets, despite clear warnings. Simultaneously, it was entangled in the collapse of Greensill Capital, a supply chain finance firm. Credit Suisse had packaged and sold billions in Greensill's risky funds to wealthy private investors. When Greensill filed for insolvency, those funds, over $10 billion, were frozen, leaving clients furious. These were not isolated incidents. They were systemic failures, revealing a deeply ingrained culture of poor risk management and an inability to learn. The world now watched as a once proud institution systematically dismantled itself, one catastrophic error after another. The sheer scale of these losses, combined with a decade of scandals, had left the bank severely wounded, its once unshakable reputation now hanging by a thread, just waiting for the final, fatal blow. Picture a windowless meeting room in Bern, Switzerland, in the bitter cold of March 2023. Harsh fluorescent lights cast long shadows over a table strewn with coffee cups and urgent documents. The air is thick with the scent of fear and desperation, as the fate of a global bank hangs in the balance. By 2022, confidence in Credit Suisse had evaporated. Scandals, continuous quarterly losses, and leadership changes created a vortex of uncertainty. Customers, especially wealthy private banking clients, withdrew assets at an alarming rate. In Q4 2022, clients pulled 110 billion Swiss francs. Social media amplified fears, with collapse rumors spreading. Stock price plummeted to historic lows. The market lost faith. The situation became critical in March 2023. After its largest investor, the Saudi National Bank, stated it wouldn't provide further aid, Credit Suisse shares plunged over 30% in a single day, triggering global market panic. Contagion fears, echoing Lehman Brothers in 2008, rippled through the financial system. The Swiss government had to act. In a desperate weekend, the Swiss National Bank and regulators orchestrated a solution. On Sunday, March 19, 2023, UBS, Switzerland's largest bank and Credit Suisse's rival, acquired it for just 3 billion Swiss francs. This was a fraction of its market value, a fire sale to prevent catastrophe. The deal included unprecedented government guarantees, a 100 billion franc liquidity line from the Swiss National Bank, underscoring the desperation. It was a forced marriage, a shotgun wedding to protect the global financial system from Credit Suisse's spectacular implosion. The iconic 167-year-old institution vanished overnight, absorbed, its legacy forever tarnished. The story of Credit Suisse is a stark reminder that even the most venerable institutions, when divorced from prudence and integrity, can crumble into dust.